Well, it's been a big week of trading amid an avalanche of earnings. Let's get a wrap of the week that was, some of the highlights, particularly from the learned folk over at nabtrade. Gemma Dale joins me now live in studio. Gemma, thanks for your time. Does it kick up a few gears during reporting season in terms of the flows?
Yeah, it's been really fascinating. Last week was a bit more subdued. We didn't see a lot of a dramatic change in terms of volumes. This week's been crazy. It's been quite interesting. So last week the big excitement was CSL.
Yeah.
Our investors, I've said it every time, are quite contrarian in their approach. They love reporting season as an opportunity to buy the things they love on weakness and to sell the things, even if they love them, if they see a bit of price strength and they're happy to take profits, they'll just move out quietly. So last week CSL was off 5%. They were all over it. It was quite extraordinary how quick they were to grab that when it was down a bit. Just on a disappointment more than anything else. They're very happy with the disappointment. That's fine. There seems to be only one significant issue that will drive our investors away from something they previously loved, and it looks like that's a dividend cut.
Yeah, that's the Australian market more broadly, isn't it, from a retail perspective? Yeah,
absolutely. But everything else that has come under pressure over the last week has sort of been seen as a fairly significant buying opportunity for our guys. So Blackmore's
got smashed. Our
guys loved it. 87% buy. On the day it was down 25%. So it has been in their buy.
And big volumes?
Big volumes. Big. For something like that, that we would ordinarily see not in the top 10, rockets up the list and people buying it really heavily because they see that weakness as an opportunity to get in.
Wow. What about on the flip side, those that perhaps they do like, but off the back of positive price movements that they've sold?
The one that really surprised me was CBA was a huge sell yesterday, so a 97% sell yesterday, and that's not on huge strength. It hasn't been significant, any increase. It looks like it's one or two really big sellers, but they're moving out en masse. They're not coming back. That wasn't profit taking. That was clearly a rotation. So that was quite interesting to observe. Haven't seen that in quite a while. So there've been quite a few other smaller opportunities they're moving out of. A2 Milk's been really interesting. So that has been top 10 for us for a couple of years. People love it. They buy it all the time. It's strong at the moment. They moved out, which we didn't expect.
96% sell. That's huge.
That's huge. For our guys in particular, that is a very significant shift. So,
how active are they?
So the trading is always at the margin. There's a core portfolio that people hang on to, and they don't tend to dramatically shift their allocations. But this is a very active period of the year, and this week in particular has been quite astonishing in terms of where it's gone.
In terms of stocks that have cut their dividend or suspended, as we've heard today, their dividend plans, any names in particular that have been shunned by the team?
So the one that was most obvious was Telstra. So cut their dividend, and ordinarily price weakness in Telstra will result in buying, and they may not hang on for the long term. We see a lot of profit taking. Once it's above $3, everyone moves out again. There's sort of arbitrage really on that one. And but that dividend cut was enough and they were out. So even on price weakness, they're like, you know what, we're done with this. It's no good for us anymore. They're quite sensitive to that. That was quite a surprise. Everything else we've seen weakness, they've been all over it. So the regional banks where there's been some weakness, they've been buying really strongly. They were keen on Bingo this week, which is a big call.
Well, look, it's it got 49% sold off on the day of the results, but since then it's been quietly creeping up. So if they got in towards the lows, a few of them would be in the money.
So there was still some buying yesterday, but very heavy buying the day before that. So a lot of them, because they are really active on the price movement, they'll get in on the day, move really quickly. They can do very well in the short term. It's whether or not they're active enough to get out.
The big sums of money as well that are being...
Or in some of the smaller stocks, not so much. You will see relatively small tranches. It's quite opportunistic. So something like Bingo would be quite opportunistic.
Oh, yeah.
CBA, enormous volumes of money. Like, people move millions around, and they see that as something that, it's a position that they've held quite strongly. They're going to move out of that.
So that's more core, would you say?
Absolutely core. And they're not just trimming at the margin, which is quite surprising.
What about internationally? I mean, if that's the domestic scene, what sort of trends are you seeing as far as international holdings are concerned?
It's been quite interesting internationally as well. So for a very long time, it's been buying. very
Yep.
consistent buying for the simple reason that people have not held direct international equities before, so they're building up a portfolio, if nothing else. And also prices have been rising for such a long time. The last 6 months they've had to rethink that strategy. So we've seen pretty consistent trading, if that makes sense, rather than buy and hold strategies. So in and out of Amazon, in and out of Apple. Tencent's been sold off, which surprised me a lot, but the price has come back really strongly since 6 months ago, as I said. So they've been moving out of that. Baidu had a really good result overnight, so they might be moving into something like that. So internationally, a lot more active, a lot more trading type behaviour, and this opportunistic behaviour we see in the domestic market, we're starting to see internationally as well.
How sophisticated are these people, these investors, would you say?
As it relates to international?
As it just relates to the market?
So when I talk to professional fund managers and friends in the industry and that kind of stuff, they're always astonished about how quickly our retail investors move. A lot of, a professional investor will be watching something for months and months and months. They make a decision, they talk to their broker. Some of their decisions can take quite a long time to play out. And also because they're moving such enormous tranches, they can be quite slow. When they see a mum and dad sitting at home on the mobile, seeing news and trading immediately, they're quite astonished by how quick it is, and that is quite typical of a large group of our investors. They don't wait. They understand the likely impact. They do have this contrarian bias at the margin of their portfolios, and they're happy to move.
And just finally, what about ETF holdings? I mean, we're talking about the buying and selling of individual international shares. What about trends you're seeing as far as international ETF or exposure to various asset classes through ETFs? I mean, is that something on the rise? Is that core? Is that traded? How does that play out?
So ETFs have been hugely popular with our investors, particularly younger investors, which I think is quite positive. They're taking the time to understand the market. They're happy to go along the whole market rather than try to make stock-specific decisions. What is most interesting is that the most bought ETFs on the ASX are over the ASX. They're not buying international ETFs on the ASX. We see some really fascinating stuff that they trade out of the US that they can't get access to here. So really, shorts and highly leveraged stuff and all sorts of interesting things.
More exotic.
Very exotic indeed. Small group of people doing some interesting things. But domestically, there is a focus on domestic ETFs. They're in our top 10 for our younger investors. It's quite interesting.
Gemma Dale, thank you. Good as always.